From an American perspective, growing up in the U.S., we've always heard from economists that a strong dollar is a good thing. But how is it really affecting the global economy?
It's a good question. Well, a strong currency tells you one thing, that the global markets like whatever it is you are doing with your domestic economy, or that on a relative basis you're in better shape. The rise in the dollar is actually not the issue. It's the fundamental changes which are causing the dollar to rise, namely that we are becoming gradually more risk off and investors are seeking safe haven US assets. Now, put this in context of what Donald Trump says and with the Fed. Even if the Fed were to cut interest rates, perhaps even go further than that, consider the circumstances. That would probably be a weak global economy where markets were a little rocky. In those circumstances, the demand for safe US assets would be even higher. So weirdly enough, what we actually want is for the Fed to be thinking about rate hikes, because that would signal that the global economy is improving and probably investors will be moving away from safe US assets into risky assets. Consider 2017 versus 18. 17, Fed hikes, US economy is doing well, so is everyone else. The dollar weakens. 2018, Fed still hiking, US economy still doing well, but dollar strengthening. Why? Because everyone else is doing badly. This is not a US play, this is a global play.
That's really interesting. So does that mean that while the dollar remains strong and if a Fed easing cycle will not be able to weaken the dollar, that actually what the Fed might be trying to achieve, which is higher inflation, but also putting confidence into markets, and offsetting the impact of the trade war, is going to be ineffective as long as the dollar remains strong? Well,
look, you can't offset the impact of a trade war with monetary policy. I mean, trade policy is supply side, monetary policy is demand side, so you just can't fix the problem. The other thing to keep in mind is, if I'm an investor, I see 10-year US yields, okay, they've fallen a little, but they're still high on a relative basis. If we suddenly become risk off or much more risk off and we think the Fed is about to cut interest rates, of course, my bet is I buy treasuries, and what happens to the dollar? It goes up as a result.